Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy because things are getting worse on almost a daily basis. Now, as you'll know if you follow the channel, there is a limited amount of data that's released by the Kremlin. We can't see the amount of data that we used to see before the war in Ukraine started. However, we do get some really important metrics. And the metrics that have just been released for July show that business confidence and the outlook for Russian businesses is the worst that it's been for the last 3 years. We're going to go through the details as to what all of the companies in Russia are thinking about the prospects for the next 6 to 12 months. And also, I want to have a look at what's going on with gasoline prices because they're following a really interesting trend at the moment. But before we get started with all of that, I'd like to ask you to subscribe if you haven't done so already, because I know that more than half the people watching these videos are not subscribers. It doesn't cost you anything. It's not really a subscription. It's just a show of support for me. It makes me happy. And also the YouTube algorithm likes it and helps to promote my videos. So smash that subscriber button for me, please. And I want to talk to you about today's sponsor, investing.com. Now, if you follow the channel, you'll know that I'm an active investor. And you'll also know that I love to follow data. And investing.com has one of the biggest databases available anywhere. And the great thing about it is that it utilizes artificial intelligence. So it looks at what's going on with all the different stocks and comes up with selective picks. And if you subscribe, you can get access to their artificial intelligence picks, the AI picks, and they've just been released for August. Now, I've been following investing.com for the last 6 months or so, and I've had some amazing results. And I just wanted to share a couple of shares with you that I've purchased. On the 2nd of May, I purchased Marvel Technologies, which is involved in semiconductors, at a price of $62.40. Since that time, it's up by around 20%. I'm still holding it. And on the same day, I also purchased another stock called MKS, which is involved in technology solutions, for $74.99. And that's up by around 25%. Now, I wasn't aware of either of those two stocks before using investing.com, but they were promoted by the AI picks. I did the research, I looked into them, I liked the look of what was happening with those companies and the movement in the share price, and I've been rewarded. So if you're interested in using investing.com and subscribing, the great news is that their summer offer has been extended. So you can get a 50% discount plus an additional 15% for being a Joe Blogs viewer. So click in the link below if you're interested in that offer. Now, in terms of what's going on with Manufacturing Purchasing Managers Index, this chart shows the movement in the last 12 months. And if you follow the channel, you'll know that we've looked at the PMI index a number of times. This is basically a survey that's taken amongst all of the purchasing managers in Russia. And so they're asked lots of different questions about what's happening with their stock levels, their forward ordering of raw materials, their planning for the future. And what this shows is that over the last 12 months, there has been a significant deterioration in the PMI. The scale on the right-hand side is an index and goes from 55 at the top to 46 at the bottom. And the key number here is 50. If we have a score of 50, it means that companies are neither expanding nor contracting. That's basically the status quo. If the score is below 50, it means that the companies are contracting. And you can see that in June and July, the score has come in significantly below 50. In June, it was at 47.5, and in July, it's deteriorated further to 47. And if you look at the situation since the start of 2025, when the index came in at 53, there has been a complete collapse in these numbers. And if we expand the scale of this chart to show the last 3 years, you can see that the current score is the lowest that's been recorded at any point in the last 3 years. And you can see that significant trend from starting in 2024. We've got a hugely downward momentum here. And one of the reasons for that is because of what's happening in the Russian economy. The Russian economy has been boosted by the wartime switch, this concept where the Kremlin is now sponsoring lots of different companies in Russia to supply things to keep the war in Ukraine going. And unfortunately, what that's meant is that it's pushed up wages, and we'll have a look at those in a moment, and also reduced the number of people available to all of the other companies. And those other companies are now suffering. And if we have a look at this index, it shows business confidence in Russia, which is a similar metric to the PMI, but slightly different. And you can see that over the last 12 months, business confidence has absolutely collapsed in Russia. If we look at the scale on the right hand side, it's actually another index. Now, this table here goes from 0 at the bottom to 8 at the top. And a score of 0 means that it's equilibrium. There's neither confidence nor negativity. But the real issue here is the trend. Back in July through to December of 2024, business confidence was coming in between 6 and 7 points. So business managers in Russia were highly confident on the outlook for the economy for the foreseeable future. However, since we've moved into 2025, there has been a huge reduction in confidence. In May, it fell into negative territory. It bounced back a little bit in June, and in July, it's at 0. And if we widen the scale of this chart, it shows you what's been happening over the past 5 years. And you can see that the current levels are the worst that's been seen in Russia since the start of 2023. And you can see the impact of the movement to the wartime economy here. That started in 2023, and you can see there was a massive fall in confidence in 2022 following the invasion of Ukraine, and it was down below -6. We then saw a bounce back as Russia started to instigate its wartime economy move, and businesses were being given this revenue by Russia, and also some of the companies were finding ways around the sanctions. However, in 2025, we've got the double whammy of the slowdown in the economy and also the tightening in the sanctions. We've seen lots of financial institutions in India and China being told that if they're found to be dealing with Russian companies that are sanctioned, then they too will be sanctioned. And so it's becoming much more difficult for Russian businesses to do any trade. And if you look at that trend in 2025 and extrapolate forward, then Russia could quickly find itself back in the same situation that it was in 2022. And it certainly looks like it's moving into negative territory. So in terms of answering the question as to why is there a lack of confidence and why are the purchasing managers in Russia so negative about the outlook? Well, one of the reasons is interest rates. So the Russian central bank has been hiking interest rates since the end of 2023. They rose from 7.5% to 21%. In order to put the brakes on inflation. That's why the central bank did it, because inflation was getting out of control. But the problem with putting the brakes on is that it also puts the brakes on the economy, because companies in Russia do not want to borrow money at 21% or even higher than that if you're adding a margin for the bank lending. So what's been happening over the last 18 months or so is that Russian companies have not been taking on more debt unless they've absolutely had to. And so they haven't been investing into expansion, investing into new production and facilities and taking on more staff. They've been basically sitting tight. And the only companies that have been taking on more debt are those that are making losses, because that's the only other way to fund your losses if you're not making any profit. So what that means is that you have a lack of investment, so that slows down the economy. And also those companies that are taking on debt are being hit with higher and higher interest charges, putting more pressure on their cash flow and making it more likely that they'll become insolvent and go bankrupt and actually close down. And that's what we're starting to see in Russia now. The impact of these high interest rates is really starting to hurt. And also from a consumer's point of view, Russian consumers don't want to borrow money to buy cars and go on holidays or refurbish their homes or buy a new kitchen or do all of the things that you might do when interest rates are low. If interest rates are at 2 or 3%, then you may decide that you're going to take on a loan to replace all of the windows in your house, for example. But when they're at 21%, you're definitely not going to do that. So that reduction in consumer lending means there's been a reduction in consumer demand. That means that Russian businesses are doing less business and therefore they're struggling, not making the profits, and so they're having to borrow money. And this becomes a really vicious circle. And as I just mentioned, the reason why the Russian central bank has been hiking interest rates is to try to deal with the inflation. And this chart shows the movement in inflation over the past 3 years. And one thing to note here is that the scale on the right hand side does start at zero, but you can see that interest rates have been above 6% for the vast majority of the last 3 years. And if you put that into the context of the USA, for example, where the target rate of inflation is 2%, 6% would be off the scale. When we did have inflation at 6% around the time of the COVID pandemic, that was seen as a complete crisis in the USA. And that's why interest rates were hiked up, but they weren't hiked up to 21%. They were only hiked up to around 5%. So you can see here that over the last 3 years, this long-standing high inflation becomes cumulative, because if you have 10% inflation, if you look at 2022, inflation was up above 15%. If you have 15% inflation today, and then the following year you also have another 10%, then effectively that's like 25% inflation year on year. And that's what's been happening in Russia. We've got extremely high inflation on top of last year's extremely high inflation and the high inflation from the year before. So what that means is that prices start to get out of control, and people then are struggling to be able to buy as much with their rubles. And that's one of the problems, that this high inflation has really damaged the purchasing power for most household budgets. So they're now having to pull back on what they're spending. And the other impact of high inflation is that it tends to drive up wages. People need to be paid more to just buy the same amount of things that they were buying previously. And of course, the wartime economy has also had a really big impact on wages. It's forced up wages because the companies that are in the program, that are being sponsored by the Kremlin, being given lots of cash and guaranteed contracts, they're able to offer high wages because they know that they've got guaranteed sales and revenue and profits. But that's driven up wages across the board in Russia, because if demand for people goes up and wages go higher, then if you've just lost all of your staff to one of those companies, you need to offer those sort of wages to recruit new staff. And that's what's been happening. And this chart shows the movement in real wages. And this is on top of inflation. So this is the movement just in wages, excluding inflation. And you can see that over the last 12 months, there has been a real increase in wages. Last May, the increase in wages was sitting at 9%. By December of 24, it was up by 11% on top of inflation. And inflation at that time was around 10%. So we're talking 21% increase in wages. And the most recent data we've got shows that real wage growth is around 4.2%, and that's on top of inflation of around 9%. So real wages, the actual wages, are going up by 13%. So that's higher than inflation, which means that the people who are in employment are being paid more so they can spend more. But the problem that Russia has is that not everybody's in employment. And also, there's now a shortage of labor. They don't have enough people because lots of people left the country as a result of the war. And if we look at what's been happening with real wages over the last 3 years, you can see the impact of the wartime economy. It started in 2023, and you can see that real wage growth went from zero at that point to over 12%, and it's remained at that level for the last 3 years. So once again, this becomes cumulative because you're measuring this year's wage growth against last year's. So if you had a 10 or 12% increase last year, and then you've got another 10 or 12% this year, and then another one next year, then that means that your wages have risen by maybe 30% over the last 3 years. And that's keeping inflation high and causing problems in the economy, which means that the Russian central bank then has to increase interest rates. And so this becomes a really vicious circle. Now, I mentioned at the start of today's video, I wanted to look at what's going on with gasoline prices, because Russia is one of the biggest producers of gasoline in the world. And so it's actually relatively cheap to buy gasoline in Russia. However, this chart shows what's been happening over the last 12 months. And I think it's quite interesting because last July, a litre of gasoline was going for around $65. However, by December, that had come down to 55 because we saw a global reduction in the price of oil. So that was passed on to consumers. Now, over the last 6 months, we've seen oil prices moving around, but they're pretty similar to what they were 6 or 7 months ago. But in Russia, we've seen a significant increase in gasoline prices. And you can see that a litre of gasoline now is trading for around 75 cents. And that's the highest level that it's been at any time in the last 12 months. Well, June was the highest level, July is the second highest level. But it's interesting that at a time when Russia is trying to boost its economy, and you would have thought gasoline prices would be quite key because transport needs gasoline, people need gasoline, everybody needs it to get around. Russia's a very large country. But the price of gasoline has been going up. And if we compare that to what's been happening in the USA, because I think the US market is a very good indicator as to what's happening with global oil prices, you can see that it's not the same as the Russian chart. It is the same from last summer through to December. We saw this reduction in gasoline prices, which was driven by a global fall in the price of oil. However, in the last 6 or 7 months, gasoline prices have only gone up slightly from 80 cents per litre to around 83. So a marginal movement, very, very small. And if you compare that to what's happened in Russia, it's night and day difference. And what we're seeing here is that Russian companies are having to pass on their increased cost to try to cover their own costs. So the economy is struggling for a number of different reasons. And I thought gasoline prices was an indication, a really interesting indicator, because that's usually a barometer as to how healthy things are, whether things are going well. And what we're seeing in Russia is that the companies involved in selling gasoline are struggling. And so they're having to increase the prices to cover their increased costs. And obviously, that's going to make things worse for Russian consumers and Russian businesses. So what's the summary and conclusion today? Well, I wanted to post this video because I know that a lot of us are interested in what's going on in the Russian economy. And I've been talking about Russia struggling for some time now. And I get a lot of messages from people saying, well, when's it going to start breaking? But what we're seeing now is the impact of all of the things that have been happening for the last 3 years starting to filter through into the real life businesses in Russia. We looked at what was going on with the purchasing managers, and the index shows us that it's now at the worst position that it's been for the last 3 years. The purchasing managers in Russia give us a very strong indication as to what's likely to happen over the next 6 to 12 months, because these are the guys who are in charge of those businesses. They're having to plan ahead, buy in all of the stock and raw materials, and organize all of these staff and production schedules, and work out exactly how those businesses are going to produce as much as they need to over the next few months. And what those purchasing managers are telling us is that they feel the least confident that they've done at any point in the last 3 years. And that's based on a multitude of different factors. And we also saw that the business confidence factor has come down significantly in 2025 and looks like it's about to move into negative territory also, which would be the first time for around 3 years that it's hit that level. And all of this tells us that Russian companies are really struggling right now. And one of the reasons why they're struggling is because we've had 3 years of very high inflation, which has been pushing up prices year on year on year. So lots of things have become much more expensive in Russia. Now, that's partly as a result of the sanctions, because Russia is struggling to import the same level of things that it was previously, and also because there is a workforce shortage, because Russia doesn't have as many people who want to work in Russia anymore. Lots of Russians, around 1.5 million, left the country in the 12 months following the start of the war because they didn't want to be involved, they didn't want to get called up, or they just didn't agree with the ideology. So they moved on, and also lots of international companies left Russia, so lots of workers left with them. So Russia's now got a smaller pool of employees. Those pool of employees are being paid a lot more because of the move to this wartime economy. The Russian state is now sponsoring lots of businesses, and so they're able to offer higher wages to bring people in to fill all of the jobs, to maximize their output and maximize their income from the state. But that's damaging all of the other companies because they're having to keep pace with what's going on in the labour market. And because there's a shrinking number of people and the people who are employed are being paid more, they're all having to offer higher wages. And those higher wages are meaning that Russian businesses are now struggling. So lots of them have been taking on debt to cover their losses. But the problem with taking on debt at the moment is that interest rates are up at 18%, and they were as high as 21% recently. So interest is very expensive on any loans that you're taking. So if you're a company in Russia that's struggling right now with cash flow and profits, that debt is going to make things significantly worse. So it's putting further pressure on you at a time when wages are going up and lots of other things are becoming much more expensive. And I thought the example that we looked at in today's video of gasoline was a really useful one, because we saw what was happening in the US. Prices have been pretty much stable for the last 6 or 7 months. But in Russia, we've seen a significant increase in prices. They're up by around 20% in the last 6 months. And that's because Russian businesses are struggling to keep pace with what's going on with inflation and interest rates and their debt burdens. So they're having to pass on higher prices. But that's only going to make things worse, because most people and most businesses in Russia rely upon gasoline and diesel for their transport. And so if those costs are going up, that will feed through into higher inflation. And therefore, in theory, the central bank should be pushing up interest rates to bring inflation back down. But of course, the government and President Putin is telling the central bank to reduce interest rates to relieve the pressure on Russian businesses. So we've got a really vicious circle, and it's going to be very difficult for Russia to fix this, particularly while all the sanctions are still in place. And also, Donald Trump is trying to increase the sanctions. If Russia doesn't end the war in Ukraine at some point soon, President Putin is going to see a large increase in sanctions, and that will make things worse. And we have got a really interesting situation right now in Russia. And if things get worse for the rest of 2025, then we could see a real implosion in the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. Thanks to everybody for watching this video all the way through to the end, and thank you so much to everyone that's supporting me. If you bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a YouTube member or a Buy Me a Coffee member, thank you so much, and here's something to put a smile on your face.